I'll give an example on Bitcoin where you could have spotted the accumulation pattern in this consolidation. I think those who read my Bitcoin report yesterday know what I'm talking about, but I want to go into deep a little bit more on that subject so you know what to look for when patterns like these happen. We currently see that Bitcoin is breaking out and is moving. It has consolidated for, I think, the last 2 or 3 weeks, 3 weeks actually, and I thought it was time for a setup yesterday. So I posted this call in the Birb nest because I saw a few things on Bitcoin that were actually pointing to accumulation and were actually pointing to that momentum slowly building on a lower time frame, and it broke out during my night. So I woke up to a Bitcoin pump, which was absolutely perfect. And I think the one of the first reasons for doing this call was simply the setup that Bitcoin was going sideways. It was holding the 20 EMA. Slowly, you could see that it was being bought up. All these lows held, and price was actually forming some higher lows in here, which is awesome in such a bull trend, because if you have a trend on Bitcoin, it's best to assume trend continuation. And already based on that, you could do a call because it's a good assumption. You can see the pattern forming, and if you see some momentum like I saw yesterday and a resistance is being tapped a few times, it probably breaks out. So that's what we saw here. But I want to show you also what I saw with the CVD, the cumulative volume delta, which is, in my opinion, an awesome tool to see which traders are actually on the wrong side of the market. So I've shared in the past some videos about how to use the CVD, but I'll go over it and show you some of the basics. So the CVD is the cumulative volume delta, and the volume delta by itself measures the aggression in the market. So the aggression in the market is when somebody puts in a market order, crosses the spread, and buys actually a little bit above market price to grab that liquidity and ensure himself for that coin. So it shows some aggression, it shows eager market participants. It can also show market maker activity and stuff like that. But over time, you can measure that volume delta and see what the general market participant is doing and where they might be on the wrong side. So on itself, the CVD isn't that of an interesting indicator, but you always have to combine it with price action, because the CVD measures the aggressor in the market, but you can also see what the limit orders on the opposite of that are doing. And it creates some interesting patterns, or it can create some interesting patterns. And I think one of the most interesting ones is the one we saw on Bitcoin. So in this range from the last 3 weeks, we saw that there was basically a lot of aggression. There was that aggression in shorts, like these are the coin margin contracts, so it's the futures. These are the stable coin margin contracts, so also the futures, so they can short. And also on spots, there was some offloading happening. What does this tell us? It tells us that people were shorting while price was actually not going down on Bitcoin. So it shows you that the shorters basically are losing it from the buyers. and the buyers are actually absorbing that selling pressure because price is holding up. Price is basically going sideways, while actually the shorters are aggressive. So it means that the limit orders are accumulating. They are using that selling pressure to accumulate more Bitcoin. And this is quite a typical pattern you would see in accumulation, where shorters can't break price down, buyers absorb that selling pressure, and then you have to wait for some kind of move. And I think we saw that yesterday, where the spot CVD, so actually the spot buying, went up again, while shorts might close, like you can see CVD flat or going up slightly. And that means that the rally that's starting over here is actually a solid rally, and it's being supported by spot bidding and spot buying. And that's what often happens in these accumulations. You see that the futures shorters are closing into spot bids, often marks a bottom. So that's also why I decided to pull the trigger yesterday, because I thought this would be a rally up. And you can also look at these heat maps, these order book heat maps from the last range. And you can see that over here, there were orders hanging and orders being tapped. So this is, for example, Coinbase. This is, for example, Binance. You can see that every time there were orders over here that were being filled on spot. So that also points to accumulation when you see orders in an order book, and these orders provide support in such a pattern. And that's the thing, like, orders in an order book are just there. You don't really know the reason, so they might not be there for accumulation. They might just be there to lure other people, so don't always trust them. They don't always provide support. Actually, in a lot of cases, they don't point to support. They mean that there is some shuffling going on in inventory from bigger market makers or exchanges. So there are a lot of subtleties, and I think these work best when you combine it with different data points and different data sources, like the CVD, like technical analysis. So that's how you use the CVD and some other information to spot that accumulation in the market. But I think I see a question that asks, where can we find the CVD indicators? Well, you can go to Coinalyze, and I will drop the link in chat. And you can put these indicators on your chart by, and let me remove them so I can show you that, by clicking indicators in this chart, and then you type in CVD, so it filters, and then you can get the aggregated CVDs here. So it's the coin margin, stable coin, and the spot, which I use. And the thing about the aggregated CVD is that it aggregates it across multiple exchanges. I'm not sure if we can choose which ones. Yes, you can. That's absolutely great. So it adds them from multiple exchanges, and you can choose which ones. But I think it's great that you can see the general direction. So that general direction is awesome, because it's across the market, and it shows like the general consensus in the market or across exchanges. So that's why I like the aggregated.